Okay, just 1 minute. Okay, I think we're ready to start. So, hi everyone, I'm Isaac. I'm a price action trader following Al Brooks, and this is my personal journal for end of day review for S&P Futures. That's either the ES or the micro MES. And today is Friday, May 15th. The day has just ended. The week has just ended. Yeah, I've technically improved and I'm technically positive for the week, but still got some things to work on. But that's okay. It's always more to learn, even when you're good at trading. When you're making when you have the results that you want. So, still, I got some things I'd like to improve on before I finally go live. Okay, let's start from the top. Monthly chart. So nice bull move up, found support when it came back down. Okay, then April, nice bull bar there. And we're in middle of May. Nice bull bar here, but so far there is a wick at the top. I'm sure the bears would love to create as much wick as possible by pushing this down further. But I would still expect to find buyers down here anyways. Here's the weekly chart. And yep, this week has ended as a doji. There was a big gap down today because the overnight after hours bars avalanched it down, created a big gap down, and the bears took advantage of that today. So the weekly bar here has a lot of wick to the upside. Still a bull body. And I would still expect to find buyers below bars, or at least buyers at this support here. So I think on this chart, for the weekly chart, the bears have more work to do. But today shows that they're trying. We'll see, though. Here's the daily Globex ETH. You can see it's still running a little bit. It's 4:40 p.m. Eastern time, so the day is technically done, but then the market runs for a little bit longer before finally closing down before the after hours begins again on Sunday evening. Yeah, so they came back down to this level here. Came down to test these highs over here. That's a big bear bar. Haven't seen that in so many bars, so the bulls might still go up a little bit more, but I think it might be time to start going sideways in this context. Again, not so much on the monthly and the weekly, but yeah, when we look at the daily, might start seeing a little more sideways action. Here's the daily RTH. And there's the gap down that I talked about. So this bear gap here is still open. And they went down here. I'll just show you. This is Friday, Thursday, Wednesday, Tuesday. Did they close the gap with Tuesday's close there? That this like doji? I will check right now. Do I have a data box? Yeah. Okay, so for this day, what was the close? It was 74.20 even. The close here was, oh wow, 74.20 even, 74.20 even. Okay. The Bears closed that gap then. So that's good for the Bears. So they're really showing their teeth here. Yeah. I could definitely see more, again, sideways, more sideways action. Although the Bulls are still in control. But yeah, I can see more bear bars, more bear days happening, more dojis maybe. Yeah, but I'm still going to be cautious about that. Anyways, here's the 60-minute RTH, and you can see today, yep, big gap down. First hour turned out to be a doji, a lot of wick to the downside. So they tested these levels down here. And then on the 60-minute RTH, it's barbed wire. And I think Brad Wolf warns us about trading in barbed wire. At least on the 5-minute chart. It's just too easy to get chopped up over there. Having said that, I did notice there's a possible trend line there. And towards the end of the day, it broke. I'm not sure I would consider that a trend, like a channel, but it just kind of looked like one, and I just kept it in mind that that line broke. And you can see that the Bears were able to close the day. They actually created a new low of day at the very end, and again, we saw this on the daily RTH that they managed to close a bull gap here. So this day here on the daily RTH, this doji pin bar with a small bull body, and then there was a gap up, and the Bears closed that. Okay, here is the 15-minute ETH Globex. And again, this was yesterday's RTH session, and then going into after hours. I don't know what happened, what news there was, but it's just a big sell-off. You can see there into the morning, in the pre-dawn, and then coming into pre-market. Right? So, and then that was the context for the traders that that look at the after hours bars. You can see it went sideways, kind of sideways up, and then just came crashing down at the end. So sideways. Okay, let's now come to the 5-minute RTH, which is where we base our trades. So again, big gap down. And the first bar shows the market accepting that gap down, although that wick to the downside just makes me question it a little bit. Still, I'm just curious to see what stop order bears could get. Yep, half R. Half R if they sold below the low of bar 1, which is, again, with that wick, very risky. And I don't usually trade in the first half hour to 1 hour in the day anyways, without really clear context and confidence in like the higher time frames and my understanding of what's going on. Yeah, otherwise I wouldn't normally trade in the first 6 to 12 bars. But for the traders that did, if it's the big institutions with their algorithms or their scalping algorithms, whatever, yeah, they got a half R. The bounce by the bulls. I also want to point out bar 4, low of bar 4. What did it touch with? I think it touched with... Yeah, so this here is my indicator for prior day's open, high, low, close. So that was the close, again, the close of this daily doji here. That was Tuesday. Yeah, so Friday, Thursday, Wednesday, and then the previous is Tuesday. Yeah. So there were buyers there. They got their scalp. I don't use the ATR indicator right now. I don't check that right now, but I could tell that it was quite high today with the kind of volatility that we had. And yeah, so we went sideways for a little bit. You know, buyers below, sellers above, the usual at the beginning of the day. Nice bull move up here. You could think big down, big up, big confusion, as Al Brooks says. Tries to break out. Disappointing follow through. Goes sideways a bit. Comes down. We have a wedge here. Comes down a little more. Again, support and resistance being tested, finding buyers and sellers to bounce the market back into some range. We come down here, another wedge, nested wedge. And then you see we found support down here, these lows, or the low of this this nice bull bar here where it first broke out. So we find support there. We start climbing back up a little bit. At this point, we're clearly in a trading range. But then I notice bar 41 here, this nice bear bar, touches down at support here, around the low of, or the open of this nice bull bar here. And then the bulls carry this back up. So that makes me think that the bulls want their two-legged move. What would that be for a measured move? Yep, so there was the 1R. And after that 1R was reached, the market came crashing down. So the bulls just swooped in and just made this tank. They came back to the open of the day. So of course, any buyers that bought up here, they try to maybe get a break even, maybe scale in, get a break even there before this goes down further. And trading ranges or sideways ranges usually move in 2 legs up, 2 legs down. So starting from here, this would be a 1 leg. So leg 1, leg 2. And I noticed that we started getting below previous lows, like here, low 41. We got below that here. Even with all the wick to the downside of these bars, it's just so many bear bodies in a row. It kind of makes me think. And then the bulls come in. And yes, I did draw a triangle. I thought, okay, contracting triangle. Fake out breakout, and then it just says, oh, never mind, comes back down, and it goes the other way. So that made me think that we were more bearish. Also, the fact this being a trading range, and then little fake out breakout there, made me think this was going to come crashing down. Although it was almost end of day, and normally you should not be trading end of day for most people, unless you really know what you're doing and you really know the context, and you can handle the quick moves, or if you have a measured move target and you're sure it's going to be reached. I have to admit I did make a mistake today, thinking that this was going to break out above the high of bar 11. And I think I am rewatching the Brooks BTC video course, and I think what he said was it's got to break out, have a nice breakout, but then also have nice follow through. Let's look at bar 47. Yeah, okay, it's a nice bull bar, but it didn't close above bar 11, so there's that. So it was still inside the range when you think about it. I mean, even if you don't count this one, if you count maybe the high of bar 14 over here. Yeah, sure, it broke out a little bit, but look at that follow through. 48. Disappointing follow through. But one thing I thought was, well, look at this pullback. How much money are the bears really making on these pullbacks? Relatively speaking, I know with the high ATR, of course they can make more, but just relatively speaking for the day, this wasn't very good. And there were open gaps here, right? There were body gaps here, here, and then gaps here, here. So I thought, okay, this could go up and maybe try to reach the 50% of this gap, or even try to touch with the, looking over here on the daily RTH, maybe try to touch the open of yesterday's bar. And that didn't happen. Instead, the bears just swooped in, printed a huge bar there, and here's the end result. So a few things I got to remember is for breakouts, if I think that the market is going to break out into a trend or a measured move, make sure that it's a nice bull bar closing above the highs of the current range to the left, and then make sure it has a good follow through. And that just didn't happen. Now, it did go a little further up, got its 1R based off of this measure here, which I measured earlier. But that was it. And on top of that, wedge top 1, 2, 3, 4. So nested wedge. So overall, it was a trading range. Created a new high, also a new low. And on top of that, the fact that it broke above this contracting triangle, I should have expected that it was going to come back down and then go the other way. So, yeah. Anything else I should talk about? Well, really, I think that would basically be it. I just got to get better at days like this. When I see the market in this context. So yeah, especially with these fake out breakouts. Al Brooks says in his course that 80% of breakouts fail. And this next leg here kind of tricked me. So yeah, they got me there. And yeah, obviously I'll continue working on these little details and improving, and then I can avoid blunders like that. I'm still technically positive for the week, and I'm positive overall. So I am improving. Having said that, I obviously want to do better than that, better than how I've been doing. So, yeah, I will leave it at that for now. If I do think of anything else, I will maybe do a second recording. I guess before I forget, I will just point out I found a wedge here, like a line, and yeah, sure enough, the Bears went for it. They went for a third leg down. Even though I think in the Brooks trading group, the advice is don't trade the third leg. That's dangerous. Unless I heard wrong. I mean, you can correct me if I'm wrong. But okay, that'll be all for now. Please give any feedback on anything I did right or wrong, where my analysis is good and where my analysis can use more work. And yep, that's it for the week. So have a good weekend, everyone, and I'll see you guys on Monday or the next time I record. Okay. Thanks a lot. Bye for now.